Yo, what's up, fam? It's Nick here with some raw day trading, and I'm here to talk about how the algorithms, plural, the market is beatable, but not in the way that you think. I think a lot of traders come in and they have a lot of misconceptions. Even very experienced traders come in with a lot of misconceptions, and because what ends up happening is something will work for a while and then that stops working. And so you have people selling a course, you have people selling um, these ideas, or like propagating these ideas of like, you buy the first 1 minute pullback, you did it. It works a good amount of time still to this day, but sometimes it is actually a vicious reversal. And in certain circumstances, um, in certain market conditions and market regimes or volatility regimes, that 1 minute pullback, if it's at the open, for example, right now, is going to cook you. And that might not always be tomorrow. It might not work like that. The day after, it might not work like that. But recently, that's kind of how it's been. Is you're going to get this nice pop and then no follow through, or maybe a nice sell and it looks like it's going to hell, and then that's the one that ends up ripping and going higher. So, all to say, things will work. There are gaps in the dam. Got that from Owen Cook. There are gaps in the dam. There are places where there's gaps in the algorithm that will work, and then they won't, because they get filled in by algorithms, by people noticing these kind of inefficiencies. That's maybe not the best term. These opportunities, and these opportunities get front run by those algorithms, or which happens in the case now of Schwab, which is super important right now. If you trade at Charles Schwab, for example, any of the setups that you've been trading before aren't going to work. Like literally past 5 years setups, that shit ain't working. Why? Not because the setups on the chart aren't working. It's because you're going to hit buy and at the right place. Once you hit buy at the right place, you're getting filled much higher than you would before, thus eliminating that positive edge that you had. So as the Schwab market maker, whether it's Citadel, Virtu, or whoever they route their market to, or if they do it internally, as that has changed, it has become less profitable to do these more obvious setups that have worked in the last 5 years. And that's just how the market is. The market changes. You have to change your behavior along with it. You have to look at what's working, what's happening before it goes, what's happening after it goes, what's happening, how it's signaling. Like, for example, what I've noticed is whenever it's signaling really bad, it's usually going to go higher. And then when it's signaling really good, it's usually going to flush lower. And the volatility also has increased. The bands in which the market gets controlled by these algorithms has widened, and they're faster to pull their orders, so they're able to paint the tape and make it look more confusing and faster. I remember maybe 3 years ago and before, or 2 years ago and before, the spreads would be wider. They would be what in my mind were honest spreads. They would be 2 to 3 cents on maybe like a $1 stock, and you would get filled in between maybe, or at the ask, whatever. Now they're like tight like this. You can't really tell what the actual spread is, and you're getting filled. It's going like this. They'll take your order. They'll take a second to fill it. They'll pull their orders. They'll pull their orders on the offer. It shoots up. You get filled, then it shoots back down as they put the orders back in. Basically, there's a term I use in my mind when I'm trading. corralled. That's, I think, what it is. And traders will start getting corralled. Like how, like, let's say you have a herd of cattle, and the cattle wants to go one way, and then the horse and the cowboy go out around the cattle, and they're like they'll go in front of it and they'll push it back the other way, and then there'll be another horse on the cattle, and another cowboy on a horse, and they'll push the cattle back the other way, and kind of corralling the traders exactly to where they want to be. And oftentimes they're setting traders up for a move against them, or for a chop, in order to chop them out so they're out of the move in their favor. This is happening all the time at a more and more increased pace, and you got to be able to get around it mentally. Okay, you got to be able to get around it on the time frame that you're playing, and you have to be able to position in a risk reward fashion where, one, you're getting filled at a good price without crazy slippage, or at least if you're getting slippage, that there's mad opportunity. Okay, this will change in the spots. I'm not even going to talk about it, and in fact, I don't want to talk about it, because the other thing that I'm going to talk about, or the other thing that's important, is you can't be where everyone else is, because that's de facto where they're going to be targeting. And it sounds conspiracy, but everything that works before gets targeted. Okay, you're going to get targeted if you're going with the crowd. So the crowd buys a dip. Okay, now the dip goes much farther. Or crowd buys the dip. Okay, if you buy the dip, it's actually an illusion. The price the price looks like it's dipped there, but the order gets pulled and you get filled way higher. Like, this stuff's happening, and you can't buy in those same places anymore. You have to be more nuanced with your points of view, more nuanced, and you have to have experience and know the algorithm well enough, and the executions well enough, to be like, okay, I'm probably going to get filled. You have to be anticipating where you're going to get filled, and you have to know what it means if you get filled high, if you get filled at the price. Sometimes if you get filled at the price, it's going lower. Sometimes if you get filled high, it's going higher, but not always. There's not always that potential. Sometimes it's a trap. And so having enough time in front of the screen to understand this, and enough self-control to put yourself in better positions where you're not getting hunted as much, because they're actually hunting the opposite side of the trade. And that's how you have to do it. This is how you're going to have to figure out your ways to get out of the main groups that are trading. You have to see it, what's going on, get an idea, and get that lower risk entry. Sometimes that's in a breakout. Oftentimes, especially these days, it's not, though. Like, not everybody can trade like Ross Cameron, just buying the highs and, selling that pop. Especially if you're at Schwab, where they'll take a little bit of a second to fill you. You get filled way high. All of a sudden, you're getting filled, 5, 10, 15 cents higher. And if that's with size, and if it doesn't hold up and go, your risk position is way compromised. So a couple things that I did over the years to help me kind of tune in. I looked at charts religiously every day for years. Okay, is that good? Is that bad? I think it's medium. The charts don't take advantage of what's happening in real time, and that's bad, because they're not able to relate what's getting painted in front of you and the fills that you're getting. So oftentimes the charts will look really red, it's getting painted down, and then on the last second it pops up, because they know traders respond to the charts, or algorithms respond to the charts, in like the 1 minute chart, the 5 minute chart, 15-minute chart, etc., and so on and so on. And there are algorithms that play with that. There are traders that play off that, and certain things equal certain outcomes usually. And the breaking of those expectations means something, and the chart patterns themselves mean something, and there's certain probabilities associated with each thing. So I kind of just studied the charts for a long time, it didn't really do me a lot of good in holding, because holding longer term, at a certain point, it's just like you have a chart, and then you have such low liquidity at the lows where if I were looking at a chart, I'd be like, okay, this is where it goes. But that low liquidity at the lows could mean it's going to go much lower, or it can mean it's going to go much higher, and your stops aren't really going to be respected. Like you're going to get stop and slippage on the stop, or it's going to get hunted if you have a stop, or if you get into that low liquidity. This is the problem that I came in with, was I would be getting in these low liquidity spots, and I would be the most obvious player to hunt, and then I would have to get cooked out. I would have to jump back in and get cooked out again, and then after I gave up, then it would gently grind higher on even lower volume or slightly higher volume, either way, and then explode much higher. So I had to find a way. I had to find the areas that kind of work for me in that sort of cycle. But all in all, these algorithms have sense of the traders. Like, I don't have proof of that realistically. I have proof of that experientially. Either that, or they know how to bait traders in. Either or, the result is about the same. You buy, they sell. You buy, they sell. And so you have to take that into account wherever you're buying. And you have to find your ways around these algorithms, especially if you're trading out Schwab. Now, you have other brokers where you can't trade as much, and you have to be more selective because you have commissions and ECN fees, etc. But those also come with other benefits, like you can hide your orders. How good is that? Hiding your orders. Like you're trying to sell a big order, aka Ross, you put it a little below the ask. It's an invisible order. You can break it up. You have your hotkeys and your specialized, order routing, dark pools, etc., which you don't have at Schwab, and the information is not being, milked out, and your behavior is not being studied. Another benefit. But the main way that you beat the algorithm, the main way is to not fucking trade if it's not making money. If you're not making money, you stop trading. You back off. Algorithms, market makers, they kind of have to be there. You don't. You can go do something else. You cannot trade for the day. You can go fall asleep. You can go away. And that's really the best way I've found to make money. There's been so many times where I made money and lost it. Because I didn't walk away, because I kept getting baited in by these kind of controlled situations. These are the things. These controlled situations, these stocks, they move in a way that understands your psychology better than you do most of the time. And so your job is to understand yourself better than they do. And then to control yourself and understand that they're watching you. Understand that every move you're making, they're adjusting. Every move anyone else is making, they're adjusting. And they're adjusting to the balance of the buyers and the sellers of the market in order to make the most money. And if you have that in mind, and if you understand all the implications of what that means, then you may have a chance of figuring out the puzzle on a daily basis. And if you also are able to use your specific broker abilities well, aka Schwab has free executions, even though they're shitty and sometimes get slippage. If you're understanding where you can get in without slippage, if you're understanding how to use your hotkeys and stuff well, if you're executing through like Lightspeed or something, or if you have a following. I'm not gonna say anything. If you're able to execute well with this stuff, if you're able to, maybe you have better access to shorts and you can hold through pain much longer, all of this stuff, you have to find the advantages of your own situation that you're in and execute well with that. And that's about it. That's all I'll leave you with. Um, it takes time to find your niche in the market. So trade small, don't lose money. This is not day trading advice. This is don't lose money advice. My main thing, the way you beat the algorithm, is to not trade. That is the way. Sometimes situations are so controlled, you are not going to win. Other times, the algorithms don't have control of the situations, and you have to be experienced enough to watch and understand what the difference is in those situations, and to understand if you're able to get filled at an appropriate price to take advantage of that with your broker and get a good exit. Sometimes you can't even get a good exit. So, all that being said, I'm gonna take off. I actually stopped doing daily recaps because one, they weren't getting much views. They weren't really helping me out. They weren't really helping other people out. And I figured I would do more kind of this meta content. So there's a little bit more meta content. I hope you find it helpful. Like and subscribe. This is not advice. This is purely for experiential recording for myself. Maybe for you. Maybe you can learn something from it. Maybe you can learn that day trading probably isn't the thing for you to do. It's mind-numbing most of the time. But I wish you the best. Don't follow me. Don't follow anybody at all. That's the other thing. I lose more money by going in the chat and getting off my own game and the stuff that I'm comfortable with, and like starting to like getting subtly influenced by people in the chat than I do any other time. So you really have to focus on your own game. You really have to focus on what works. Find something that works and do it until it doesn't. And then keep looking, keep studying, or back off if nothing's working. Maybe go do another career. Maybe day trading isn't for you. Maybe day trading's not for me. I don't know. I'm at a point where I just don't give a shit anymore. I kind of just want to go do something else, and I've just started traveling a whole bunch, and that to me is more exciting now. So I don't know. Take what I say with a grain of salt, but there are still I'm still making money, so the less I trade, the better it seems like. I have 223 orders I had today through Schwab. Hopefully I don't get banned, but I only made like $100, so whatever. Anyways, I'm out. You guys have a great day. Entertainment purposes only. In fact, don't day trade. Love you guys. Have a great day. Bye.